Hey, what's going on YouTube? Kenny here. So today we have a ton of stuff to talk about, so we're going to go ahead and just jump into it. Basically, we're feeling really bearish right now, and we're already calling for a correction, a little bit of a pullback come July, but I think it's going to be a lot more pronounced than we may have expected. I'm going to show you what I'm looking at. So the macro newsletter last month talked about no man's land, and I think that's really a good theme. I did not expect it to be as no man land-ish as we are seeing. Obviously not a word, but everybody relax. Okay, so this is your world in data. I posted on the Slack chat, the UK cases were around 550 or whatever like that per million. And then on the rolling 7-day, and then recently, a very new print, we've exceeded 600. This thing is doing the hockey stick. If this was a stock, geez, it's going parabolic. Let's just say that. The United States is also curling up as well. So, I mean, this is a problematic chart for a bunch of reasons. But the idea here is that because of the vaccine hesitancy and kind of these pockets just really taking these Delta variants very heavily for the folks that aren't vaccinated, we are seeing a huge spike. I mean, look at this. This is the all-time highs here in December of last year. And even with vaccines, the UK is approaching that. Now, the US is doing quite fine, but the UK doesn't seem to have it under control. So that's definitely something to be watching. I'm already at the point where you indeed have to put this into your stock thesis one way or another. And I don't know that it'll be good. What you can think about is like what was running really hot in November, December. And that would be like a very, very basic low res way to look at it. And that's not what I'm doing, but that's something you could look at and think about, right? But I mean, stay at home, right? But the thing is, I think a lot of that already got priced in. So, you don't, I say that, but then the FANG names just ran massively. So maybe it is the case. Okay, so let's talk about pricing power. So we talked about this kind of on a live stream. If you know what pricing power it is, it's basically the ability for companies to pass on the price elasticity of demand to the consumer. Essentially, you got to look at goods and services that you're going to buy regardless. So I'm going to really help you out here. This goes into a really elaborate textbook definition. It talks about iPhones being expensive prior because, they are the only ones who were selling smartphones. And so all the other stuff, that's fine. I'm not interested in that. They also talk about oil supply. So supply and scarcity equals pricing power as well. And you know that looking at the oil prices, what's playing out there. In fact, we do have some OPEC news, and I'll go ahead and cover that in a second too. But my point is, if you're looking to get ahead of this, you need to think about what you would buy regardless of if it is expensive or not. So energy tends to be one of those things, right? Oil, maybe until you start buying EVs or whatever like that, but it's not there yet, right? So oil is definitely going to be one of those things. Hold on a second. All right. So again, the gist of it is, if you're going to invest in something right now, think about the things, the sectors, or the things that you're going to buy, food for instance, that are they're going to pass on this pricing power. All right. So let's talk about the kind of the S&P as a whole. Now, it's pretty nasty right here. If you look at this chart, the only things that are surviving is consumer defensive. So a lot of people are saying, you should buy your Pepsis and your Coca-Colas, things that people are going to buy regardless, no matter what. So like you're starting to see that probably in the stock market, right? Starting to see people kind of shy away from high-flying tech, the high flyers now, not FANG, obviously. FANG's had a good run. But, utilities here, like Duke Energy, Dominion, all those, like, look at them, right? They're very, very green. Oil is in the red, which is nuts. Something's going on here, you guys. I don't know what's going on. But I do expect this to be turning the corner soon. I think there's just a piece of the price action kind of just, we just had to just kind of, I don't want to say pull back, but we did have the hottest first quarter for energy in a long time. So I do expect more upside on energy, but I'm still looking at utilities and a bunch of other things. Healthcare is starting to take off a little bit here too. All right, so the gist of what's going on is exactly this. So it's a CPI print came in, and it was just really hot. As you can see, energy is outweighted when it comes to the 12-month change. All items, food and energy. Food is a real big one here by itself. All items in aggregate over here. So what does that mean? So if you're looking at this, remember we always talk about rate of change and what that means to it, right? But according to this, 1 month percent change, right? It is printing at like the highest level since 11, right? So it's definitely a hot print. Somebody said, I think Barclays was saying it's 8 standard deviations higher than was expected. Okay, this is a chart that's really going to show you what you need to be thinking about and how you need to be thinking about it. And so this chart is showing all items and the rise of the consumer price index, right? But the interesting thing is there's funny things that you can put in here. But if you talk food, okay, it was already high and it kind of spikes up, right? In aggregate, there's this other stuff, right? And we go down food from home, okay, whatever, we'll leave food up there. And then we take a look at energy. Remember how bad that one. See you later. Okay, that still seems relatively fair. But let's keep going. Energy commodities, okay. Energy services, okay. That's your midstream. No, that's wrong. All items, food and energy, okay, fine. New vehicles, fine. I'm getting somewhere here. Car and truck rentals. See you later. Here's the crazy one. Used car and trucks. What does that mean? That means clearly, there is a supply shortage of used car and trucks because it is up 43.3%. And I know people have anecdotally talked about this, but look at that. Look at that spike. It's definitely outside. So a good time to sell a used car or vehicle right now. So, these are the things that you need to be thinking about in terms of, where you want to put your money. Again, if you're going back to this kind of macro chart over here, energy is a play. How do you capture that? I think we're a little bit too overinvested probably in OIH and some of the energy stocks. So you could probably look other places, look at your Dominion and all that other stuff. In fact, I think I have the Dominion chart up. So I have the Dominion chart up just because it's Warren Buffett's baby here. They bought I think they're majority stakeholder, if I'm not mistaken. They bought it last year, right? Around here or something like that. I think not here, but I don't know. I forget. It was definitely last year. Okay, so anyways, what was my point? I did check the DeMark indicator, and based on the technicals, this is just no man's land for me. I can't buy here, but I'm watching and trying to see what it's going to do. Maybe if we get a little bit of a pullback, looking for something like 72 would be interesting for me. Here's the DeMark early count oversold here on the 13th. If you don't know what the DeMark is, the DeMark indicator is looking for sentiment exhaustion. And indeed, we have sentiment exhaustion here. So if you're saying, hey, this might be a good time to enter, it's actually not. It's on day 2 of the next kind of sell-off. Usually, typically, even if you're just reverting to the mean, you're still going to get 5 days of sell-off before you kind of do what normal price action wants to do, right? So at least 3 more days of selling. So I'm definitely not interested in it yet. What else can you do when it comes to inflation? Well, I know you all gold bugs out there thinking about gold. You might be right. I have real gold, and I have a lot of real gold. Cultural thing. I didn't buy any of it myself, but for some reason I've been gifted a ton of real gold. Large amounts. Here's the thing. This chart is not bad, and we have crossed over the 9. And it's actually a very good entry point. And this is the gold ETF, obviously. It might be a buy here, and I'm going to tell you why. I would say that Bitcoin or crypto would be my play here, but it just still hasn't done what it's supposed to do, which is hedge against inflation and slash hyperinflation. And so if you think about it in those terms, I think gold might be an interesting play here. I'm not like a gold bug, and I don't plan on holding this forever. But I mean, obviously we topped over here, and we could definitely run to it again. Might take it as a trade. And that's because I generally am going to pretend that the inflation is transitory. I don't know for sure. I'm leaning more towards that it's not transitory, but I don't like what that means. And all that means is we got to be very bearish on the stock market. So because of that, I think we're just going to hold our thesis that this is going to be fine and it recovers. But if you don't think so, and if you don't trust JP, Jerome Powell, then you might want to pick up some other kind of hedges against inflation. The thing about that is, I think Powell does an excellent job for the most part. You can knock anybody, but people are doing some really complicated work on complicated ideas. And let's not even get into like modern monetary theory or anything like that. But if you really want to think about this, right, you just got to think about it as a math problem and like what percentage of your portfolio is going to hedge against that and what percentage of your portfolio is going to say don't worry about it. And so that's a tough one to kind of master. And so here at Redcliffe, I just want you to think about what you can do for your part. And I think gold might be an interesting one now just because of the price and kind of where it's at. The price action is showing definitely life here. So based on all those things, might be something to watch. Okay, so OPEC came up to an agreement, but what I want you to take away from this is the overall production will increase by 400,000 barrels on a monthly basis, but the International Energy Agency estimates a 1.5 million barrel per day shortfall for the second half of the year, the entire second half of the year, indicating a tight market despite the gradual oil OPEC supply boost, which means for those in OIH, I generally think we are still bullish. Again, nothing has changed my mind. Price action is not reflecting what's going on, but I think consequently it will and it has to. And especially, I think, with the price action and the sell-off and kind of the big FANG names, which I don't expect to last forever, but with the sell-offs, the high flyers, Bitcoin, anything, all the Bitcoin derivatives, all your meme stocks are kind of falling by the wayside. Those are really important catalysts for things like OIH to do really well. So I'm looking for OIH and oil and all that to just kind of make a little bit of a rally here. In fact, we're probably going to buy a little bit more soon here. So the Delta variant might be a reason to extend unemployment benefits, says an economist. Why am I bringing this up? So the idea here is unemployment and those job numbers, that's going to be a very big inflation metric. And why is that? Because places like Amazon are already increasing rates. So I don't, like say we're paying everybody $15 an hour right now, right? And, before we were having a big fit about if that's like a reasonable rate, all these other professional salaries will have to increase, et cetera, et cetera. Okay, so now you got companies saying, okay, I can't find any workers. I'm going to pay $18 an hour or even maybe $20 an hour. Transitory or not, this is one of those things psychologically you can't take back. There's no takebacks, right? And if this job thing doesn't sort itself out, and they said, the unemployment was supposed to end September, here it is, ended September 6th, and it's supposed to end in states like Colorado in September. But if it doesn't, this is what I'm using right now because I'm a simpleton to really think about if this is transitory or not. Because if how much people get paid goes up, right? Think about it. People get paid a lot more. They're not going to take pay cuts. It's just baked in. There's no psychology. You can give, but you can't take it back, right? That's why we have sex addicts out there. No, just kidding. That was a really bad joke. Do I got to cut this? No, I'm going to keep that bad joke in. All right, next, AMC. Okay, why am I bringing it up? On the logarithmic, it looks fine, but on the Saturday live stream, Tuesday live stream rather, because it's not Saturday, it kind of, we talked about how I think this is free money. Basically, I think it's going to at least come down to like the halfway mark at 15, and I do think retail inflows are pretty strong, and the retail investor has enough power or punch behind it to make it do something like this for a while. So I'm not like full on bear against AMC or the meme stocks, and maybe I should be, but I do think that like if you look at the regular instead of the logarithmic, right? Let me show you. Regular mean linear. Wow, hold on. Let's just delete this and go to linear. Yeah, it looks abysmal. It's cut in half already. In fact, I think it's already kind of where we thought it was going to go. We're thinking 30 here. But, you know, with this price action, I wouldn't really be surprised if it did something like this, right? And gets to 25. I mean, hell, you know, even here is still overpriced based on the fundamentals. And of course, we're not trading on fundamentals. So I'm not saying that. But even if you're measuring the sentiment and you go into the lab and try to check against your sentiment anomalies, I still see it kind of peeling off and waning. So it's probably the end here. Not the end in terms of what's going on here with the retail, but the end for this specific trade, for this specific timeline. And I'm not saying it's going to go all the way down. I just don't think it's going to, you know, when we were up here, you know, who the hell knows? Like, you know, mania is mania. It could have went to 1,000 or whatever like that. Like, you know, whatever. But my point is, here now, not likely until we see something else. But I think based on all the bearish news that we're looking at, I don't think it's going to happen. So, all right, real quick video today, but I just wanted to kind of update you guys, talk about what I'm looking at. And in fact, you know that we're basically kind of short the market here. Most of our positions that are printing are very short puts. So we have Bed Bath Beyond that's going down. We're took up a position against the Triple Q, so the NASDAQ. We're also taking a position against the SPY probably come Monday morning. But yeah, pretty bearish here for the near term. Don't know what it's going to look like, what that equates to in the long term. But for now, yeah, just waiting for a pullback. And I'd love to be proved wrong. If we get a bit of a bull run, then, you know, obviously half our portfolio is still very, very long. And obviously our no-look long-term investment portfolio is doing what it does, so we don't look at that. So, and I encourage you not to look at that, especially in times like this. But if you're a trader and you're active, then yeah, this is the time for you to like test your mettle and see what you got, because this is the time where like you can really outperform. Because if you get gains going down, that's essentially how you outperform the market, right? So, thanks for watching. If you like this kind of thing, we do send out a macro newsletter every month. Link in the description down below. It's free. What else? Yeah, live streams are now on Tuesday. We might do something a little bit special on Saturday. I'm thinking of doing something live on Saturday or Sunday to just kind of set everybody up for the next week. It won't be with Marcus, but maybe I'll do a guest on Saturday or bring on Tommy or something like that. But me and Marcus is the Tuesday special. Probably Tommy from now on too. Maybe we'll see. I don't think I pay him enough, but we'll see what happens. And yeah, thanks for watching. We'll see you tomorrow. Take care.